Hey, everybody. Before we jump into today's episode, I just want to point out a few ways in which you can work with us here at How to SaaS. Number one, if you're an investor and you're in the middle of a transaction and you want to figure out what is the marketing potential of the target investment that I'm looking at, you can engage with us in a due diligence engagement where within 2 weeks, we can give you a very clear picture of all the levers within the marketing function of that organization for them to drive more revenue and pipeline for the business while being incredibly efficient. Number two, if you're the founder, CEO, operator, or investor of a company where marketing is just under leveraged and it's seen as a growth lever that requires more investment, we can come in and do a deep dive across 3 to 4 months and analyze all the opportunities within that business on the marketing side by looking at demand gen, paid media, account-based marketing, content marketing, product marketing, SEO, website, and much more, and come back with a set of recommendations and a roadmap for what marketing needs to execute against to drive more enterprise value for that business. And number three, if you're the CEO of a company that doesn't have a CMO right now, or there's a gap in the organization because the VP of marketing or CMO was recently transitioned out, we can come in a fractional CMO capacity and partner with you on that business and lead the internal team and the operational plan so that the marketing function continues to make progress and drive more pipeline and revenue. And we'll also help you hire your next CMO by being part of that hiring process and onboard that new person once they're ready to join the organization so that they get a running start. These three types of engagements are some of the most common ways in which investors, CEOs, and companies work with us. And we have a proven track record of driving a ton of enterprise value and revenue growth across those companies. To learn more, go to www.howtosas.com, where you'll get a lot more information in terms of the types of engagements I've described. And you can see case studies and other examples of the work that we've done, so you have a lot more confidence in partnering with us. And with that said, let's get to the episode. Enjoy the show. Welcome to the Private Equity Value Creation Podcast, where we interview leading investors, operators, bankers, and advisors to help you answer one question: how do we increase the enterprise value of our companies? My name is Shiv, and each episode I will dive deep with a guest to help you become a better value creator and capital allocator. So with that said, let's jump right in and let's get started with today's episode. My guest today is Rita Fiorentino, and she is the founding principal and partner at Arc Capital Development. And what I really enjoyed about this episode and Rita's perspective is she talks about how to manage your company through an economic downturn, and especially the current dynamics that are happening with AI, the political uncertainty, geopolitical risks that are ongoing. And just in general, we've been hearing a lot of companies struggle in terms of hitting their revenue targets and projections, or longer sales cycles or lower win rates and things like that. And Rita brings a process that she takes her companies through to make sure that they are prepared to be able to handle the downturn and also do things in the right order, so that you're not just using AI like a buzzword and trying to think of it as like a magic silver bullet that can solve your efficiency problems or go-to-market problems. And we talk about a lot of examples on the episode in terms of how to leverage AI, along with following that process to create as much enterprise value as possible. So if that's something that you've been thinking about at your PE firm, or it's just been topical and it's something you've been kicking around in terms of how to work with your portfolio companies on, I think there's a lot that you'll learn from this episode. So with that said, I'll leave you to it. Enjoy the episode. All right, Rita, welcome to the show. How's it going?
I'm psyched to be here with you today, and I am delighted to share with your audience my thoughts on how we should be preparing for a downturn and what we're going to be able to proactively do to be able to accelerate growth.
Yeah, that's a really timely subject because, even last week we put out an episode on how PE firms and their portfolio companies can drive pipeline in such uncertain times. And I think it's just something that a lot of PE firms are dealing with and portfolio companies are struggling with. So why don't we start with your background on this and ARC in particular and how you're helping companies. And then let's jump into like how you're seeing firms and how they should be managing through the downturn.
Absolutely. So I'm Rita Fiorentino. I am the co-founder of Arc Capital Development. We're a private advisory and investment firm that works exclusively in education from pre-K through workforce training. What we specialize in is working with other investors to be able to work with their portfolio companies to accelerate growth. So we're really growth specialists. In addition to being at our capital development, I have been on staff as the innovation consultant at the University of Pennsylvania's Graduate School of Education. So that gives me a whole different lens into researched best practices around accelerating growth. And so I've been doing this work almost 20 years, and it's a really exciting time for those who are going to embrace and be prepared.
Yeah, that's awesome. And talk about this, the downturn and kind of how you're seeing it. It's almost like one of those silent trends that's going on. I'm aware of it because I spend most of my days talking to PE investors, either through the podcast or through our clients. And then we also have our own client portfolio companies that we look at, and we can see that growth is slowing down for a lot of them. They're missing their sales targets. There's a lot of studies out there that are coming out that are showing that companies are well below quota or sales reps are missing their quota. So talk about what you're seeing there and what's your perspective on the downturn?
Well, first of all the markers are there. We've got a rapid economic shifts that are occurring. We are finding funding challenges in the investment market, and we've got disruptive impact from AI affecting the marketplace. So there are existential threats in the market that make it even more important to be prepared for handling a downturn.
Yeah, and walk through that in more detail. So you're saying that some of the markers what are some of the markers that you're seeing, and how is AI impacting things as well? Because that's obviously a hot button topic and everybody's really talking about that right now. So how are you seeing that actually play out in reality for these companies?
Well, first of all, I'm going to say that what I've been hearing from our PE clients and the people we work for in the investment world is they all have kind of gotten the fact that we've got rapid economic shifts, right? And so their instinct has been, okay, we're going to just conserve cash. To conserve cash, we're going to have AI replace a lot of our workforce. And oh, by the way, we know that we have to AI-ify our products, and we're going to take our product development teams that are traditional product development people, and we're going to tell them to, infuse and beautify our current products so that the market is going to accept that. And that is just not enough, and it's not going to work.
And why is it not going to work? Help us like peel the onion on that.
I was just talking to a company who is in the training development market, right? Corporate training. Okay. And they've been creating products. They've got a big database of content that they deliver to a customer base. And they're fairly shocked that their revenue is down and that the new product release that they just launched doesn't seem to be enough for their customers. And I use the analogy of, we all just used to have TVs in our house. How many households in the US, didn't have a TV? It was ubiquitous. And most households had more than one, right? We were consuming content on broadcast, then we were consuming content on cable, and then we're consuming content on streaming. And do you have cable? Do you pay for cable TV?
No.
Any longer?
No.
So why would you think that the way you've been delivering corporate training is going to be the same? We don't consume content. What was the last thing, Shiv, you needed to fix in your house?
Let's say the washing machine. Sure.
And what was the first thing you did?
Called someone.
Or if you were going to try to do it yourself, you probably would have went to YouTube, right?
For
right?
sure.
I had a handyman here the other day. He couldn't figure out how to fix the rollers and the doors. I went to YouTube for him.
Yeah.
We consume content differently. The market has changed. And that market has changed because of AI and it's going to change. All industries are going to be affected.
Let's dive deeper into that side, the AI side, because one of the patterns that I'm seeing is that, for example, like I speak at a lot of CEO summits and do portfolio webinars for PE firms, and historically, a lot of these summits have been focused around go-to-market, value creation levers, exact strategies that you can kind of deploy. And over the last, I'd say 12 months or so, I've seen these summits completely shift to everything AI. And like as much as, on the marketing side, for example, AI has made a big impact, and that's where we're helping these guys with. It's almost like putting the cart before the horse, because a lot of the companies don't have the fundamentals down. And so I can come in and tell you the 20 ways in which you can leverage AI today for marketing. But if the company doesn't have foundational, like website work, messaging work, TAM and segmentation work, doesn't have sales enablement, like I can stack other things on top, and it's just like a house that's built on like no foundation. It's going to kind of fall apart.
Shiv, you are singing for my hymnal. Like, you're completely right. Like, companies need today, they need to just stop, right? First thing they need to do is assess risk. What are your top 3 risk factors that are going to affect your business, right? And once you assess that risk, what's the risk of doing nothing, right? Are you going to be irrelevant? Is the market going to erode? Are you going to lose talent? What's the risk of taking safe, small steps? Are you going to do too little, too late? What's the risk of being proactive, right? Understand the risk. And then you can go to an entire review of your strategic plan, which is what you're getting at, right? You can't just throw in that you're going to, add AI tools and it's all going to be okay. You can't just think AI is going to replace your talent. You need, in a downturn, a serious look at the risks to your business and how you're going to build a strategic plan that is going to mitigate your risks. And one of those is certainly, your review of your pipeline, sales, your sales unit in general.
So what would a good process look like? Help us understand from your perspective. Like, I have my take on this, but curious what you think. Like, a company or a PE firm has a business that they're trying to figure out how to scale in this market. There's a downturn. AI is bringing obviously different changes in the marketplace. There's headwinds of different types, like tariffs. How would you manage that company through this type of a dynamic in the marketplace?
So thank you for asking. Clearly, I'm opinionated on this, but I'm opinionated through, expertise in this marketplace. And I would say everybody needs to start with a risk analysis, then a strategic plan. And within that strategic plan, you got to dig deep and dig hard you need your financial hygiene in place, right? You got to figure out your cash, your costs. You got to be smart about your investments in a new and different way, because the market is different. Now, PE firms are good at financial hygiene. The MBAs in charge understand how to do financial hygiene. That's the piece I think they're most comfortable with. But then you need, in your strategic review, a real look at the diversification of your product and services. Because if you have not been in touch with all of your top customers, and if you don't have them all locked down in a downturn, you are in serious trouble. The number one thing with the whole look at diversifying your products and services has to be starting with your customers and locking down your current customers, and then figuring out how to diversify from there, right?
When you say that, before you jump into the next step, is it just purely about retention, or also about expanding those accounts or those relationships? Because that can be a way to find growth in these times.
You start with your customers because you got to lock your base down, and you got to figure out how you can upsell them, because in a downturn, people are going to go they're not going to take risk with new vendors.
Mm-hmm.
In a downturn, you're going to contract and you're going to go back to the people that you know and trust. So you can diversify your product line simply by really digging into your customer base and figuring out what else they need, how to sell them more. And, they'll tell you how to diversify.
Yeah. Yeah. And I think that's a big part of it is that, in a market upswing, companies expand and they'll launch new products and services. Maybe they'll do more M&A. They'll have more offerings. And in a downturn, it's almost like the opposite needs to happen because focus is what kind of gets you through it and makes you more efficient and operationally removes a lot of risk. And in fact, even when in an upswing, I feel like companies should do that. But it's easier because capital is easier to access. There's revenue is easier to find. So companies almost expand too quickly to a place where they can't even sustain it. But then they just keep doing it because now it's part of standard operating procedure. And then in a downturn, you kind of are faced with this consequence of that, which is those new ideas are not driving the revenue that you need, and your core business starts to suffer.
Brilliant. Absolutely. Strategies is you've got to build your strategic plan. You've got to do your financial hygiene. You've got to look at your revenue and diversifying your products and services. The next piece, which is my most favorite piece to discuss, is looking at your team and creating an all-star team. Now is when you make all of the changes that you need to have happen in order to have an all-star team. And this is when you get rid of all of the B players and C players because there's no room in a downturn for anybody other than A players.
Yeah.
It's not that you go to an AI strategy. You go to what do you need to create an all-star team? And then what do you need underneath them?
We'll get back to the show in just a moment, but before we do, one of the most common and important value creation levers that we hear about on the show from private equity investors and our own PE partners is go-to-market. Yet, when these same PE partners bring us into their portfolio companies or new target investments that they're exploring, we find that the marketing function is quite immature, underutilized, and underoptimized. And so that's a huge opportunity that we see inside these companies. And if you have a portfolio company that you feel like could scale a lot faster to drive more pipeline and revenue, or you're looking at a new investment where you feel like that could be core to your investment thesis, well, we'd love to explore that with you and figure out how we can partner with you to drive more enterprise value creation on the marketing side, similar to the way that we've done with major PE firms like TA, Updata, HG, STG, and many more. At this point, we've done hundreds of engagements across hundreds of industries and verticals, and we have a ton of benchmarks and frameworks that we bring to these engagements to help you drive as much enterprise value as quickly as possible. So if that sounds like something that you might be interested in, you can just email me directly at shiv@howtosas.com or go to our website and schedule a demo, and we'd love to speak with you about it further. And now with that said, let's get back to the show.
It's interesting because we talked about expanding into new offerings and things like that. One of the other things that happens is when markets are doing well or companies are doing well, they overhire. And as the company expands, there are fewer A players per capita, quote unquote, right, inside the business. And so I think what I'm hearing is almost like right-sizing the team, building around the A players, focusing on the core business. Is that right?
Absolutely. Absolutely. And with that, under this whole talent bucket, you need the, retention strategy for keeping your best A-team players, right? Because they're going to be in demand. I believe strongly that you've got to cross-train in preparation in a downturn.
Do you think that a lot of companies are bloated right now? They have too much staff, or they're not focusing enough on the people side?
I think the PE firms get very locked into the way it used to be and the hiring the way that it used to be. You want a CEO who understands profit and loss and how to operate a business. What they need to be thinking about is we need a leader who is going to rally people in a downturn to get behind them to figure out the innovation that needs to happen for us to overcome existential threats. And for PE companies, this is a big lift. It's not how they naturally think about their portfolio companies.
Mm-hmm. Mm-hmm. Yeah, it doesn't come. Yeah, I think in general, org transformations are an area that I see in value creation plans, but I think sometimes still less than A-player talent goes under the surface or under the radar until you kind of have to get rid of some folks. So talk about that a little bit. Like, is it about right-sizing the team, or is it also about cost efficiencies?
I think everything falls apart if you don't create the A-team player that's going to get you out of a downturn. Because, Shiv, everything falls apart in a downturn without leadership. The good players are going to go other places because they're going to have opportunities. They always will. In companies today, people are scared. They've got no loyalty. They're not wanting to stay late. All of those factors are all clear, and we've been surveying and we know that, right? So with an inspirational leader who's going to take you through the tough times and a team that understands how to communicate and how to be adaptable is really important. So I'm going to say another really controversial thing. Those kind of big company, traditionalists who are used to things operating the way they have always operated, they do not thrive in these environments.
Mm-hmm.
Because the levers they know how to pull aren't the levers you need to pull today.
They don't work the same way.
Mm-hmm.
Mm-hmm. Okay, so let's say you get the team in a good place. It's your A players. And what comes after that? What's step 3?
Now you got efficiency. Now you can really look at your processes internally where AI can be really useful.
Mm-hmm.
And I have another theory. This is just my own theory. I don't think that you can use your traditionally trained people that are in a company to figure out AI internal strategies and AI product strategies. I'm sure you have people in your world, friends and colleagues, who live in that AI world.
Mm-hmm.
They're using tools and they're talking languages that are completely foreign to many traditional PE-backed companies.
Mm-hmm.
You can't take a product team and have them figure out AI themselves. It's too nuanced and moving too quickly. They produce products that are outdated before
they catch up. So what is the right way to do that? Do you bring in a separate team? Do you bring in outside consultants? How do you handle that?
I think that's the question for the team to figure out, right? Based on who you have in place. Do you need to do an acquisition where you acquire the talent?
Mm-hmm.
As part of your growth strategy? Can you then culturally integrate them in? I believe pretty strongly in that whole, you can really speed everything up just by buying it.
Mm-hmm.
Do you bring in expert consultants? Absolutely. But expert consultants that don't look like the traditional,
yes,
Bain Capital guys, they're not living in that world either.
Mm-hmm. Yes. No, totally agree with that. One of the reasons why we win deals actually in the PE space is that we don't look like BCG or McKinsey and these traditional firms that have the almost like institutional memory of doing things a certain way, and they ignore a lot of the value creation levers. So I agree with that.
Well, that's why they should hire you.
Yeah. Yeah. And that has definitely helped us and worked in our favor. What about the strategy piece? Because I get that, locking down the base makes total sense. The team and A players makes total sense. But before the processes side, like where do you see the strategy fitting in? Is it because, for example, in terms of what we want to develop for our product to stay relevant, one of the funny things I noticed now is like every product's website has the word AI in the tagline, which is insane because I don't think most products are AI first anyways, but it's just like a buzzword to throw around. So I think nailing down that strategy feels like an important step. And then similarly on the go-to-market side and some of these other areas, it's like, what do we want to do first? What should our priorities be? Or where should marketing focus? Where should sales focus? And then getting to the execution or implementation or process side of things.
Absolutely. So first of all, every team's got to figure out, based on, I want to talk just for a second about the critically important piece communications plays in a downturn. It's really easy to communicate in good times, right? Boards are happy. They pay very little attention. They go to board meetings, with smiles on their faces. But when things start to go bad, board members often don't have the expertise and knowledge to be driving strategy, right?
Mm-hmm.
They have to be educated as well as the other key stakeholders. So in order to get cultural buy-in on a strategic plan, you have to pay a lot more attention in a downturn. And so I just wanted to mention that because you said, how do you drive a strategy? Well, that key stakeholder buy-in, and that includes your board and your investors, has to really sit pretty much at the top. And you've got to do all this work, keeping them very informed, or they're going to get to the spending money part and they're going to say, I think I said this earlier in the podcast, they're going to just say, cut your staff using AI.
Yes.
And just, toss in a little AI in your product and services and conserve your cash. And we're going to get through the downturn just like we always have in the past, because they're going to think about, the other downturns that they have experienced, not understanding that this isn't like other downturns. Right?
Why is it different than other downturn?
Because we've never had the disruptive impact of AI. AI is really disruptive.
Mm-hmm. But like, hasn't there been like, let's say, the .com bubble, and then we had mobile or like just applications changing things? Like, is this just that on steroids? Is that kind of what you mean?
I don't think it is. I think it's in a new category.
Mm-hmm.
Because of the rapid rate that things are able to change, even the rapid rate of being able to develop new products.
Mm-hmm.
And the use of AI to be able to do development work
mm-hmm.
and create content. And it's just not, internal operational process automation. It's the whole impact to the whole thing. And I keep saying existential threats in your individual marketplaces. Companies will be able to be displaced.
Mm-hmm. Yeah, I definitely think there's truth to that. Like, I think one of the big disruptions through AI in the downturn is that the increase in commoditization in terms of content, messaging, products, software. You can have 20 competitors emerge over the next year that were built by very small teams and didn't require the capital intensive investment that your business required to get off the ground 10 years ago. So that definitely changes the rate at which the market is moving, basically.
Just think about how much just an average citizen has come in the last 18 months in the use of AI. I mean, my mother's 89 years old. God bless her. And, she has her iPad and she is on Facebook and she knows all about how AI is optimizing her Google searching.
Right. Yeah.
And she certainly loves watching Netflix and Netflix giving her recommendations for what the next thing she should watch.
Mm-hmm.
And that's an 89-year-old whose life has been infused in, and yeah.
Mm-hmm. Mm-hmm. So with that, like, I know we've talked about like, hey, AI can't just replace your team, but there is an element of that here, right? Because at some point, once you kind of know what you need to do or how you need to do it, you can leverage AI to find scale or to do things faster.
Absolutely. Can I give you an example on the whole, since you were talking about building your pipeline, right? So with really good use of AI tools, you can build your pipeline targets through smart use of AI, right? And you can put into AI where all your sales have been for the last 10 years. You can have AI analyze that. They can come within, short periods of time. You can have them analyze your most likely customer, and then you can ask them in a geography where your most likely customers will come from. And then you can ask them what messages are going to resonate best. And then you can give your sales organization really strong tools to be able to go sell faster.
Yeah. I think all of that resonates. I think maybe the qualm or the complaint here might be that companies are doing things in the wrong order, and they're kind of rushing to figure out how AI can replace some key activities and not getting to the outcomes that they actually desire.
Right. And I understand why PE companies, their whole gig, the whole drill, that's why they work with us at Arc Capital is to accelerate growth. Like, I get the pressures they're under, right? But you can't miss the step you're talking about, which is kind of right-sizing the whole organization for the risk mitigation. You just can't throw solutions out willy-nilly and expect to be able to come out positively on the other side.
How do you see some of the other risks in the market? Like right now, there's a ton of political uncertainty, and there's geopolitical uncertainty. Like you have tariffs and government shutdowns and global wars that are kind of going. It's a lot of stuff happening at the same time that is affecting the macroeconomic environment. And I think the downturn is being affected by that. So how do you advise companies to manage through all of that uncertainty beyond just the AI side?
The truth of the matter is, Shiv, you have to have somebody in your organization watching those macroeconomic shifts. And some companies are better at doing that market surveillance. But that has to be built into a core competency, or again, you're going to be left holding the bag.
Yeah.
It has to be a core. It has to be core.
Mm-hmm. Mm-hmm. Yeah, I think what that is. I definitely agree. I mean, for example, for our business, I stay on top of all the macroeconomic things that are going on because I know downstream it affects how private equity firms deploy their capital. Not just like the amount of dry powder that's out there, but staying on top of deal volumes, how the political environment is impacting things, how the interest rates would impact liquidity or how much capital is out there and debt and all that stuff. So I definitely think that has to be core to someone's job. It's not a stable market. Like there's so many things that are making it uneven or kind of can surprise you. And that has an effect on, for example, a deal not closing or a customer not moving forward or not retaining a contract that you were counting on.
Exactly. I completely agree.
I think another thing that I've noticed, and curious to hear what your thoughts are, because some of these things also open up opportunities. For example, we've seen that because PE firms are very concerned about the impact of AI on their businesses, it is a topic or a vector through which you can have a discussion, and you can say, hey, like, I know you're thinking about how AI can help you scale your marketing efforts. Here's the work that we've done and how we've helped scale these companies or become more efficient, leveraging AI in the marketing value chain. Is this worth a conversation? And we've seen that play out really well for us. Now, when we come into those companies, it might be that is the right angle to create value. But in other cases, there might be 3 other things that they need to do first before they can capture that value. So it's almost like an educational play to help companies understand that. But I think the more you're aware of that and are aware of what the customer's reality, how it's being impacted in the downturn, then you can kind of customize your solutions, your packaging, your pricing, even your messaging to be able to get through to them.
Absolutely. And I think that the whole need for assessment, I think I've talked about that you have to be assessing as part of your strategic look, you have to assess all your business units. And I'm sure they tell you this all the time, well, we're doing AI.
Mm-hmm, mm-hmm.
Well, they are doing AI in the limited understanding of what they know to be AI, right? So they're not lying. They just don't understand the breadth of the kind of ways without bringing, people in who really live in that space, who can really help, and put them through an inflection point.
Yeah. Like one big topic, as you said that I was thinking of it, is a lot of PE firms have reached out to us on generative search. Like, hey, we want to show up more on ChatGPT answers and queries, or have higher number of citations. And when we start looking at the business, like, the citations are important, but it might be that they have 70 other problems that need to be addressed, and they're just zeroing in on that one thing. So if you talk to them about AI, they say, well, yeah, we are doing generative search, but actually, no, you haven't done these other things that are valuable. So that definitely resonates.
Back to the fact which you started with, which is there's opportunity, but you have to put the energy into understanding the opportunity.
Yeah, and customizing it to the customer's reality. So for sure. Rita, we're coming up on time, but before we end off, like, tell us how private equity firms can reach out and what are some of the things that you can help them with?
Well, first of all, I'm delighted to talk to anybody because clearly I'm really passionate about this, and there is a lot of opportunity. So you can reach me on LinkedIn. My name is right here, Rita Fiorentino, and that's the easiest way to get a hold of me. Our website is arccd.com. You can also reach us through that. But I'm always happy to have a conversation, and there is growth potential. I want to just end with my favorite Wayne Gretzky quote, which is, skate to where the puck is going to be.
Mm-hmm. Totally.
Not to where it has been. And that's my most important message for this podcast, is, you need to be prepared, because it's not if. We're in it.
That's great advice. And I know a lot of investors that are listening are facing these challenging times. And Rita, I appreciate you coming on and sharing your wisdom, especially giving them a framework in terms of how to take an approach step by step with their portfolio companies to get through some of these uncertain times. So I appreciate you doing this.
And I wish you the best of luck, and I'm happy to collaborate if ever you get any education companies that you need expertise on. It has been a delight.
Thank you, Rita. I appreciate it.
Thanks for listening to today's episode. Before you take off, just a few requests from our side. Number one, if you haven't done so already, please subscribe to the podcast on iTunes or Spotify or YouTube or wherever you go to listen to your podcasts. Number two, if you are in the market for due diligence services, strategy consulting, or fractional CMO services, please get in touch with us at www.howtosas.com. And third, please buy a copy of my new book, Exit Ready Marketing. It covers a ton of concepts that we take our customers through, private equity investors, B2B companies, CEOs, operating partners, and marketers. And there's a ton of great value in there that expands on my previous book, Post-Acquisition Marketing, as well. So with that said, I hope you enjoyed today's content, and we'll see you on the next episode.